Hi and Assalamualaikum. My name is Nurul Natasha Liah binti Nur Kidin and I will now begin the presentation for our group assignments by giving a background on the company we choose for this task, which is Sime. In the industrial and automotive sectors, some of the best brands in the world choose to partner with Sime Berhad. Sime continues to expand, providing sustainable value to their stockholders through operational excellence, high performance standards, and good corporate governance. Sime has operations in 19 countries and a significant presence in Asia Pacific. Their headquarters are in Malaysia and they have a global presence with more than 20,000 employees. Sime Berhad is listed on Bursa Malaysia Securities Berhad's primary market. Develop a winning portfolio of sustainable businesses, deliver superior financial returns through operational excellence and high-performance standards, subscribe to good corporate governance and high ethical values, and also provide an environment for our people to realize their full potential are Sime Darby's goal in ensuring that their goods and services are consistently of a high potential and have the ability to compete with other businesses. Sime Berhad continues to provide lasting value to the regional economy with its 4 core businesses in important growth sectors. Sime first line of business is in the industrial sector and provides a wide range of construction equipment for purchase, rental, and after-sales services. The next category is motors, which will shape the automotive industry's future through the assembly, distribution, retail, and rental industries. In addition, Sime offers healthcare services through a delivery of exceptional private healthcare by a remarkable team of specialists and healthcare professionals at the forefront of clinical care. And lastly, Sime offers services in the logistics sector, primarily in the Chinese cities, which serve the Binhai Economic Technological Development Area. Sime Berhad, a multinational company with operations in 18 countries, has grown from its modest beginnings as Sime Darby & Co., which was an estate agency managing rubber plantations. Sime Darby started in an independent Malaysia after surviving 2 world wars and the fall of the British Empire. Sime Darby has since grown to be one of the Malaysia's largest and most recognizable brands in every significant market. These mercantile institutions were established in the 1700 to give free traders limited access to the markets that the East India Company dominated. These traders made their fortunes by serving as import and distribution agents for British goods in the colonies as well as by exporting goods made in the colonies to Britain and eventually the rest of the world.
My name is Misha Lipoyi with metric number 284731. Today I would like to continue present about financial ratios. First financial ratio will be liquidity ratio. It is an important class of financial metrics that used to determine a debtor's ability to pay off current debt obligation without raising external capital. It used to measure a company's ability to pay debt obligations and its margin of safety through the calculation of metrics including the current ratio and quick ratio. The current ratios of Sime Plantation Berhad would be 0.4296, while the quick ratios would be 0.3070. The following financial ratio would be activity ratio. It is a type of financial metric that indicates the efficiency of a company that leverages the assets on its balance sheet to generate revenues and cash. It includes of total asset turnover, which is 0.1342, and receivable turnover, which is 8.2074. While for the profitability ratio, it is a class of financial metric that are used to assess a business ability to generate earnings relative to its revenue, operating costs, balance sheet assets, or shareholders' equity over time using data from a specific point on time. It includes of profit margin on sale and return on assets, which is 1.0031 and 0.1346 relatively. Lastly, it will be leverage ratio. It is a measurement that looks at how much capital comes in the form of debt or loans or accesses the ability of a company to meet its financial obligation. It is important because companies rely on a mixture of equity and debt to finance their operation, and knowing the amount of debt held by a company is useful in evaluating whether it can pay off its debt as they come due. It includes of debt to asset ratio and debt to equity ratio, which is 0.3525 and 0.5444 relatively.
Hi, Assalamualaikum. My name is Nur Arna Mazara binti Muhammad Razi, matrix number 280840. For my part, I will do a discussion based on financial ratios. Firstly, we start with liquidity ratio. A company's liquidity ratio is used to assess its capacity to service its short-term loan obligations. A ratio lower than 1 indicates that the company has negative working capital and may be going through a liquidity crisis. Next is the activity ratio. The activity ratio is employed to gauge how well a corporation is using its resources and assets. A low ratio shows that assets are not being used effectively to generate revenue and that too much capital is invested in them. A corporation is able to quickly convert its receivable into cash if it has a high turnover of receivable. Profitability ratios is involve comparison to similar businesses or to yearly times. Producing net earnings for the company is indicated by a high gross profit margin ratio. A corporation is deemed to be more asset intensive the lower the profit per dollar of assets. Last but not least, leverage ratio. Leverage ratio is how the company finances its operation and assets through a combination of debt and equity. Type of financial ratio that shows the amount of debt a company organization has incurred relative to a number of the other accounts in its balance sheets, income statement, or cash flow statement.